If you are holding RZLV, the market keeps forcing an ugly question. Am I investing in a business or am I subsidizing someone else's exit? Markets do not pay you for belief, they pay you for proof. And proof is not revenue headlines or transformational language. It is free cash flow that survives debt, dilution, and integration. Rezolve AI PLC trades on NASDAQ as RZLV, yet it is fundamentally a London-based UK public limited company. Cross-border status is not inherently negative, but it raises the bar for transparency because US markets discount uncertainty fast. When a growth stage company stacks financing, M&A, and new monetization narratives, any missing detail, debt servicing, covenants, integration, cash costs gets priced as risk. Risk becomes a discount. Anchor the snapshot. RZLV around 2.5 during the regular session, down roughly 1%. On its own, trivial. In context, meaningful. Market summaries around the name have described roughly $5 million in trailing revenue, roughly $220 million in trailing net loss, trailing EPS around 0.8, about 300 million shares outstanding, and a wide 52-week span from roughly 1.1 to roughly 8.5s. That profile screams future-priced equity. The stock cannot lean on current profitability, so it leans on belief in future economics and the market's willingness to fund the runway. The company's product narrative is commerce-focused AI, reducing friction from intent to purchase. It emphasizes conversational commerce and agentic commerce. Conversational commerce means shopping through dialogue, natural language interactions rather than menus. Agentic commerce implies an AI agent that can take actions, not just answer questions, searching, comparing, selecting, and driving checkout steps based on intent. If it scales, it can lift conversion, improve retention, and become sticky inside enterprise workflows, supporting recurring revenue. If it does not, it becomes expensive R&D without durable monetization. Investors therefore need unit economics, take rate, margin, retention, not labels. Now, the dominant issue, the Crownpeak acquisition announced on December 1st, 2025. Rezolve AI said it entered a definitive agreement to acquire Crownpeak and framed it as adding roughly $70 million in annual revenue and being immediately EBITDA accretive. Immediately EBITDA accretive is aimed at calming investors. It implies that the acquisition improves profitability right away. But EBITDA is not cash, and the difference becomes critical when debt is involved. EBITDA, earnings before interest, taxes, depreciation, and amortization, is an operating profit proxy. It excludes interest, and interest is unavoidable if debt is assumed. Equity holders ultimately care about what remains after interest and integration cash costs.